are prepared to break the silence. I'll be out in the sunshine, running beside the lions. I've been feeling down, but I've been looking.
Hello, welcome back to Winnerface Trading YouTube channel, the only channel that has been optimized to make you rich trading the Forex synthetic market. If this is your first time of visiting my YouTube channel, do your best to subscribe and turn on the bell notifications so you get notified each time I upload a new content. Try to like and refer this channel to your network so that YouTube will push us to a higher level of audience. I don't just upload video, I look at what the trading community are passing through, then I have to go sit down for a couple of time. Most cases it's going to take a lot of time, like up to weeks, months, and I'm gonna bring out the solution, and these solutions are very scarce, and that's why we are Winnerface Trading, creating a lot of winners in the Forex space. Okay, make sure you subscribe to our channel and turn on the bell notification so you get notified each time we upload a new content, and try to like and refer this channel to your network so that YouTube pushes to a higher level of audience. If you know properly that you are actually losing money and you cannot be able to withstand more losses, make sure you are proactive and you diligently subscribe to our unbeatable and success driven and steady profit withdrawals channels, and enroll for our courses and mentorship so that you will be able to actually get on from your losses and failures in this industry of trading. Okay, right now the topic we shall be discussing is action cycle principle applied to Forex synthetic market. Action cycle principle applied to Forex synthetic market. You see, this topic actually optimize the traditional application of trend analysis, the traditional application of market cycles, the traditional application of market seasons, which also have their uniqueness and also similarities. And right here, this is a kind of a super idea that eliminates a lot of errors and losses incurred in other similar ideas. There are ideas that are actually similar to this topic, but when you deploy them, you still see yourself lose money because they lack some psychological, philosophical, and high level mathematical principles and also geometrical ideas. So right here, this topic actually corrects those problems, solve those problems. I'm gonna continue by reading the document, and pretty much we quickly head over to the practical application of this topic in the MT5 trading app. And so right here, action is controller state of the market over non-measurable finite period of time. Okay, the extent action can go is indefinite. That means you can't predict the end of an action, but you can have a patience. You can have patience to wait for action to either continue or change direction. Okay, that is, no one can tell the exact price and time an action will end. Okay, action. Okay, so what will be running in your mind is, what is literal meaning of action and what is the practical meaning of action. When I go to the MT5, I will go harder to explain the literal meaning of action and then couple it with the practical meanings so that you can be able to deploy this topic with its full potentials. Actions are linked to season, but the difference is its complex arbitrary trajectories and geometries. There are by actions or sell action, the uniqueness of action with respect to trends, season, and planes is that actions are characterized by energy, complex geometries and trajectories, patience index, weighted saturation, and then weighted change of action. Action continues indefinitely until there is natural change of action. In other words, actions are irreversible. They are irreversible artificially. Okay, when you trade action with proper entry, whether in direction of trends or not, you make high energy profit. Okay, you make high energy profit as well as in deep retracement. Okay, so a deep retracement is an action. A retracement is an action. An impulse is an action. But your ability to understand this for practical purposes, in most cases you will actually understand something, but you cannot be able to make use of it. You just understand it, and days go by, you are still where you are. So this topic is actually trying to force you to, instead of be a theoretical trader, it's trying to force you to be a practical trader who is making profit despite the complexity of the market movement. Okay, now what is an action and how do we deploy this? I will start with some illustrations and then we go to the chart for real application. Take for instance a market that want to make a movement to a particular point is not actually going to just follow a path of least action. Is going to have both combination of paths of least action and paths of complex actions, okay, or a path of bigger actions. So if a market want to leave from this point here, this is arbitrary point in space A to a point B, okay, all of them is arbitrary because you cannot specifically say where they are. Localized, this is for practical purposes, explanatory purposes. And so price will not actually move on a straight line to reach point B. Rather, it will actually follow a complicated geometry and trajectory to definitely reach to point B, making the total time taken to reach point B to be very, very long. Even though there are part of least distances to move from point A to certain point very close to point B. Okay, this part of least actions is very, very hard to figure out. So instead of struggling to find the path of least action, your ability to understand the geometry and trajectories of action as a whole will actually help you to actually place a trade and then being patient for the market to reach the final destination. Okay, so that is what this action cycle principle is talking about, that markets can actually originate from a point and reach another point, but not the way you think. It's not going to happen on a straight line. It's going to follow complicated geometries and trajectory, creating highs and lows, but then it has sense. It have knowledge base of where it is heading to, and it must definitely reach there whether you like it or not. But your ability to optimize your entry, if you are buying a buy action, if you are buying during a buy action, you want to buy the market at a very low price, and if you are selling during a sell action, you want to sell the market at a very high price so that you will be carried along by the market to make a very good amount, like a very huge profit, infinite profit. Okay, so when a market is undergoing a buy action and you are ignorant of this idea, you want to initiate a sell action during a buy action, it is called artificial initiation, because you alone is trying to initialize this action. Only you in the market trying to initialize this action, while the real control of the market is actually doing the opposite action. So whenever you want to make a trading decision, and especially whenever you want to place a trade, ask yourself the question, what is the action cycle and who is in control of this action? Are you the one in control of the action? Any action that you are the one that control the action is going to lead to loss. One person does not move market. You have to be in group, right? So you want to follow the trend. You want to follow what many people are doing. And immediately you notice that market is actually heading in a given direction, then you want to follow that direction, right? But to know this direction, to actually know the direction that market is heading to, is a very complicated issue, and that's why I deployed this topic. So market cannot move from point A to B on a straight line, even if it can do it in some period of time. Like it can do it in some of the time, it only happens maybe 1 to 2% of the time. 98 to 99% of time is going to follow a complicated trajectories and geometry. And now what I'm saying is, instead of this market to fly all the way from point A to point B, okay, is going to actually do something like this: go up, come down, go up, come down, go up, come down, like that. When it's coming down, is having a lot of distractions, which are counter movement. When it is going up, is having a lot of distraction, which are also counter movement. Okay, so the market passed through a lot of friction. So this is point A. So what the market will do is, it's going to do something like this, and do something like this, and then do something like this, and do something like this. And trying to represent this might pose some complexity, but I'll try as much as I can to represent this. This is point A, this is point A right here, and then the market do something like this. Remember, market flow from right to the left, and then it will do something like this. It will do something like this. It will do something like this. It will do something like this, like that. So it is moving from point A to point B, but it moves up, and as it is moving up, it is also moving up and down, and then it moves down, and as it is moving down, it is also moving up and down. So to every action there are reaction, to every action there are reaction. So what is action now? At this junction, I'm going to define action, right? So an action is a price function P of t, which is also a function of space x. This s will be represented with a generalized small letter s. So we are going to use small letter s to represent this, or we are going to use z. Okay, I don't want this to be more complicated. If we have space as a parameter, then we can actually replace space with the c. Okay, so let's replace space with c. Okay, now price, as being a function of time and space, will be in such a way that if it is going up, it's going to create a wave, and we are going to use sine wave to represent it. But this sine wave is a noisy sine wave. That is not a natural sine wave, but is a sine wave that has been commutated with noises, that has been superimposed with noises. Okay, And so if market is going from point A to point B, it will first of all try to go up with a sine wave and drop with a sine wave, and then go up again with a sine wave and drop with a sine wave, and then go up until it reaches point B. So this process is called action. But then inside action there are minor actions, okay? Those actions that are in the direction of main trend where the market is heading to are called the impulse action, and those actions that are in the opposite direction are called the retracement action. Any of these actions can be traded if you can be able to enter at the right price, and if you're able to trade the action early. And the truth is, for you to actually succeed properly, you are going to have this in your back of mind that an action A, though based on Lagrangian mechanics, action can be represented with S. So we are going to use a capital S to represent action. So for an action, okay, S, we can say that this action S is equals to, okay, the impulse action SI plus the retracement action SR. The action is the impulse action, okay, SI plus the retracement action SR, okay. Now this is a complex mathematical idea, because for each of these parameters of action, every action must have reaction. So for the impulse action, you will still see some reactions, and these reactions are going to be trapped because they are not the main action, they are just reactions. So there will be a trap. But if this trap is in the direction of a main trend, or is actually heading where the market is breaking level, it becomes a reactive signal. The difference between a reaction and reactive signal. A reactive signal is now a price sense or direction that is going to break a new level. But a normal reaction is just if market is tending to a given direction, then a trap direction or a counter direction will happen. So to every action there is reaction, but reaction and reactive signals are not the same. These are different English languages. Reactive means that the market broke level and pushed back, and then a new movement have to start to break a new level. So it is reactive because it actually reacts to the previous action. So it's reactive signal, okay? But reaction and reactive are two different. In order to avoid this confusion at this spot, we are going to take reactive as impulsive event, okay? So a market is going up with a sine wave and then suddenly drop with a sine wave. This is a point of symmetry. That is the point where the market change action. So this is a symmetrical line. So when it is creating an upward action, those downward movement is called retracement action, okay? Why a new action that follow the main trend, like this one that break level, is called reactive signal or impulsive action, okay? Okay, but what I mean by reaction is that a retracement can be a reaction, but the reactive signal is the impulsive event, is the one that actually move in the direction of the main trend, okay? So this is this action, this one is impulse action, and this pullback is retracement. Is what? Retracement action, okay? And then A second action that break level like this one is called reactive signal. That's what I'm trying to say, or an impulsive event, or you can still call it impulsive signal. Okay, so when you understand this various component, because at this level I'm trying to treat price action or price function or price movement as a Fourier event, whereby you are going to study the harmonics in the price movement and be able to understand each harmonic and be able to combine or superimpose harmonics, so that you will be able to know at any spot in time what are you going to follow, what are you going to do, which direction are you buying or are you selling, and if you take any action, in how many ways can you make as much profit as possible in a very short period of time. Okay, so it will be a very complex mathematical principles which are not going to make it so stressful. In other words, I'm going to go to charts to make it more practical than more theoretical, because if I keep doing the theoretical part of this, it will make me to introduce a lot of mathematical principles which will make you to give up, because not everybody like to actually visualize things in mathematical form. And therefore I'm going to go to practical, so that instead of you to learn the theory, you learn the practical, you see it real, so that when you see such thing in the chart, you'll be able to face it squarely and be able to make massive profits, right? But the little theory I have presented here, you can actually go and amplify it on yourself by actually using your own brain, your own idea, your own mindset, and develop it and see that what I'm saying is real, right? Okay, that's cool. So let's head over to the MT5. Okay, I'm going to work. I just placed this trade just to prove a fact. Okay, I'm going to work on J10. I placed this trade because I feel like some people don't actually want to watch a video to the very end. If you are watching this video up to this spot, it means you want to succeed with respect to this topic. Okay, so right here, why I placed this trade is to actually bring the power of this action principle. Okay, so this is 30 minutes time frame. Okay, now as an action principle trader, you have to do your top-down analysis to understand the general direction of the market, where the market is actually, because market can be doing some things, but that is not where it is heading to. Market could be on a buy season, but is selling for some time. That doesn't mean the buy will not hold again. That selling is a counter signal or a counter trade or a counter price movement that want to confuse you, so that you will not enter the buy, right? So right now we are into practical application. I'm going to delete all technical tools, and then I want you to visualize this market. Don't draw anything on the chart. Yes, visualize this market. What are you seeing? So we see a market that started from this point and move all the way to this point and then drop and continue moving from here to the top. So we call this event that happened here, that took place from this spot all the way to this spot, it is called buy action. But then it is a major buy action, because if you look inside, you will see that some small sells and also some small buy action. But when you combine those small sells and then small buy action, they become the total buy action. That's why I say to every action, there are two components of every action. That action itself and the opposing action. That means if we have a generalized action S, it will always be made up of that action itself S, because this is like a programming language, but it's cool. Mathematically you will not believe it, because you can't say that 2 is equals to 2 plus something S, but this is a logical something, right? So S is equals to S plus, okay, S is equals to S plus SR or SOP, opposing action, or SR, which is retracement action, is opposing action. Okay, so that's cool. So I bring the issue of line of symmetry. So when action is going to change to another type of action, because we basically should have two type of action, the buy action and sell action, but each of these action is represented with this formula. Even inside this formula, okay, we can also derive another formula which we call the main action SM, okay, is equals to the main action SM is equals to the impulse action plus the retracement action SR. Okay, so these are mathematical complications, but what I'm trying to say here is that this market has been in a buy action. So if you want to succeed in this kind of event, it's no longer, oh, I'm trading the trend, I'm following the trend, I'm following the impulse, I'm following the retracement. All these are politics, because when you come here, you feel like, oh, if you go to higher time frame like 4-hour time frame, the market is downtrend, and so you should sell, and you should be selling in haste, like you should be like, you'll be so confident to sell. But that doesn't make sense. Check all the sell that happen at certain high prices. What happened? The market destroy those sell, the buyers destroy those sell. Check, there are a lot of sales that tend to happen at higher time frame at high prices, but the buyers at the end destroy those sell. That is to tell you that the real action are buy action than the sell action. Okay, now as an action trader, you don't need to fear to enter the market. You can just enter the market literally at any point in time, so long the action have not saturated. That's why in the document I was talking about saturation, weighted saturation, and so on and so forth. What do I mean? You can just wake up one day and buy this market at this price. As simple as that. What I mean, you can just buy at this price. Even though it's not good to buy at this price, you can still make it. When you buy at this price, what do? You find a major swing that has been completed and put your stop loss. So when you put your stop loss here, the market actually pull back, but you were not taken out. What's happened? It continued going in your favor, right? So in our VIP, we actually optimize these signals. We optimize these signals by actually giving you trades that are fresh, like a market in which an opposing action is there. Because what actually makes you lose is when you trade, then an opposing action will make you to lose, like the market will just be going against you. So we are actually optimize the signals so that all those opposing signals are zero, and the real signal is what you send, and that's what pays you, right? So why I place a sell on this market is because I discovered that this action is molded by this line, and so it has broken out of this line. And you see, in the document I talk about complex geometry. So in most cases the geometry is complicated. That's why you need a strong hand to make it. Geometry is complicated, so I cannot just come here and maybe I woke up one day, I will draw something like this, and when the market pulls back, I will not say, oh, the buy action have ended, so you will sell. When you sell, what happened? The market continue going to buy, the market continue buying. So I don't want you to face these problems, because it's gonna make you lose as much as you can, right? And you see how the market is flashing and is actually buying. So what made me to put a sell right here is because I've done my top-down analysis, I've run my structural analysis, which I'm not going to show you in this video, and I know that this market is going to sell. And for real, no matter how it pulls back, it's not going to hit my SL, and this market is going to sell all the way to this price, and if possible, it's going to break out of this price. And so that's cool. And right here, I will be ending this video because the video is taking time. I'll be ending this video. Maybe I feel like I need to touch that USD, because I pretty much like the asset because it's very like it pays so much, and also Bitcoin USD also pays so much. But let's pretty much work on this asset. Something just happened some couple of days now. Gold actually dropped from a very high price to certain low prices, and we can say that gold is on a sell action. But it's very risky to believe that gold is on a sell action, because every new action is subject to be fake, and these are the complications I didn't actually mention in the document. Okay, so we have a market that maintains this trend line. All I need is to have belief. Just enter this market anywhere, elsewhere, just enter elsewhere and buy. Simple. Put your stop loss on a completed swing, like any swing that break level. You want to put your stop loss on a swing that break. So we have a swing, this swing actually break this level. So put your stop loss here and then enter this market. As simple as that. Now, something happened. The market actually followed this trend line and break out of this trend line. What I'm trying to say is that you might be selling USD, you might be selling gold, and based on based on the fact that you are actually following a sell action. But the truth is that this action is still fresh, so we cannot strictly confirm that the sell will hold. There's probability that gold will create a fake out about this support line and still go up. Okay, but the truth is, some people that are selling here on the belief that they are following sell action will still make it. They should have made it, because if they are entered here and put their stop loss here, they make some profit. Action pays. Action pays than sentiment. Understanding action principle pays than just having some emotional issues as a trader, right? If we check BTC USD, you will pretty much see some of this stuff right here. We discovered that in certain time frame, pretty much in certain time frame, that Bitcoin actually break out of this level and it is pulling back to test this level. So at this spot, you will see that action cycle trading is more of political and logical judgment, factual judgment, a judgment that's based on a fact. It is fact that no matter how this market moves up, one day it must pull back to this strong resistance that was broken, that has now become a support, whether it like it or not. And that's what really happened. So at that spot, when we see that Bitcoin is actually behaving in a certain way, I don't actually want to allow a wait for Bitcoin to break out of this trend line. What I want to do as a professional trader is to manage my risk and sell Bitcoin at certain lower high, because if it is making lower high, then it is on the same mode. So I will be believing that the action is a sell action, and I'm gonna sell this at certain high prices, and immediately it reach this trend line, I'm gonna clear my SL to the entry and monitor and take some profit, maybe 50%, and monitor how the market behave about this trend line. Once it breaks this trend line, then I'm going to hold longer. If it reach this level, I'm gonna take my profit, because I know that a new buy action will create here, because the probability is high. It has about 80 to 90% probability to create a new buy action, which is different from the previous sell action. Okay, there are a lot to this topic. I'm not going to talk about it, but what is cool is you can go for our mentorship and subscribe to our VIP channels for you to become, a real rich, wealthy, successful trader. Bye for now.
If you're prepared to break the silence.